man. I'm glad we got through the little technical snafus there.
Oh, me too. I can't tell you. I'm still kind of shaking from those technical snafus. You are just so cool. Like, I can't tell you. I even had your script pulled up, and my whole computer crashed um, while doing this. So once we're doing the post editing for this live thing, we'll just zip it out. Um, this is so cool. Okay. Oh man, my computer's so slow. I feel like Tommy Boy. Have you ever seen Tommy Boy the movie?
Oh yeah, man.
He-
That's sort of the oldie but goodie back in the day.
yeah, yeah. You got like just so excited about going to college and living your best life. And oh my goodness, Jeff, this is terrible. I had all my questions. I have two monitors now. Like I've made it to the big time. I got two monitors.
You're grown up, man. You're grown up.
Whew. And I got a little blue light in the background. I got to get a haircut. I'm gonna get a haircut on Thursday. But
It probably looks good with the skateboard though. I like the look.
thanks. We gotta hit it. We gotta hit the skate park in Urbana. Urbana has a really nice skate park. And then you know who else has a really cool skate park? Hillcrest.
I've never been on a skateboard before, but I know that you ride one, so that's why I made a nice comment about it. But I will come watch you skateboard.
Oh, Jeff, I'm the one to watch on the skateboard. But let me tell you, if you want to watch some good skateboarders, Hillcrest. Hillcrest has
Okay.
some impressive, very impressive skateboarders. Like they're really good. I took Benjamin out there, and we were just like having a blast. Like they were doing jumps. There's a pool, an in-ground pool that they can just go up and down. There's like two in-ground pools and two in-ground pools and one just ginormous skate park. It's probably about a half an acre of
Wow.
just concrete. I like it a lot.
Yeah.
And like all
As
the
a,
people
as
there
a
were just focused on skating. It was pretty cool.
Yeah, my young son wanted a skateboard, and as a parent, I'm like, please don't fall. We don't want the kids to break anything.
I know.
Mom and dad don't have time for that.
Nobody has
Also,
time. Nobody has time, and then you
also
feel terrible for them getting hurt and all that bad stuff that comes along with, falling and
yeah,
getting hurt.
getting hurt is part of growing up, right? But it's about how it impacts me, right?
No, you're right.
Son or daughter, don't get hurt because it'll impact me a lot. Yeah,
My computer to work. We are live. So
okay.
I've got my questions. Next time we do this, I'm gonna print it out. I'm gonna go a little bit old school, even though we're streaming
Okay.
to like
We call that analog, buddy.
we're going
You gotta
analog.
go. You gotta have an analog backup.
We're going analog, and I'm glad that my digital smartphone brought me forward here, brought me to the 21st century. But we'll go analog next time. But I am just so happy that you are here, Jeff. This is just so cool. I know I said that probably a million times already, partly because I'm nervous that I don't want to make you look bad with this. And then the other part is it is just so cool that you're here. I couldn't be happier. So I just want to get to know you better, share what you got
Yeah,
going
man.
on over there with the viewers. So like, tell me, who are you? What does your company stand for? Tell us all about it.
Oh yeah, man. Well, first off, thanks for having me, Peter. Awesome to be here. You have been trying to get me on something outside of a normal conversation and leveraging technology for what, a couple years now.
It's been a minute, but let me tell you, I have not been keeping track.
Hey, but thank you for getting me out of my comfort zone and getting out there and the streams and wherever this is being broadcast. I appreciate it. And certainly congrats to you and your young brokerage, doing some big things in a very chaotic, challenging, exciting year last year. So congrats on that.
Thank you. Thank you.
Big time things for Murray and Co. Real Estate there. But a little about, I don't know, you want me to talk about my long walks on the beach? What
No,
do you
no,
want to
no.
know about me?
We're talking about your company. What it stands for. Like, tell me what
Definitely.
Jeff Novotny Lending Team stands for.
Yeah, definitely. So, operate the Novotny lending team more so from a marketing perspective. We have a boutique team of individuals here locally in the DMV. We're with George Mason Mortgage, and our parent company bank is United Bank. That is a mouthful for anybody that I'm ever talking to.
That it is.
But for you, for anybody that is listening on the viewership side here, it's the idea of having feet on the street, local and boutique, from a lending perspective. We have the strength of one of the top residential lenders here in the DMV area in George Mason Mortgage. With that, if we were a standalone entity, you would probably consider us what we would call a correspondent lender, where we have 10 to 15 different investors that we're going to work with behind the scenes to then release that mortgage loan after settlement in a pool. But that allows us to generate really good pricing for our clients. The difference between a correspondent lender and, let's say, a broker is that our entire staff is actually a bank employee. And so from processing to underwriting to closing to any of the Novotny lending team members that you're going to have the opportunity to interact with, we're all here locally, and not just at the same company, literally here locally. There's some feet that you can really hold to the fire if anything's going awry. The parent company bank, and especially in a market like this, actually being affiliated with a bank provides a really good opportunity for what we would call portfolio. That's just a fancy way of indicating that it's a bank-created product, and that could be anything from a construction to permanent style loan, where you're literally buying the lot, building a custom home, and eventually having permanent financing, to land purchases, to physician loan programs, renovation loans. So the strength of having all of those products and really good professionals under one roof is really important in a competitive DMV marketplace. So my little tagline as a team, if you will, for me and my compadres on the Novotny lending team is home financing excellence. And really it's about delivering a consistent experience to our clients that again, we may not ever be perfect. It's real estate. That's never a straight line, if you will, to the finish line. But we really do pride ourselves in providing a great experience to our client base. And again, when you're 100% referral, if we don't keep folks happy, they're not going to rave about us on social media with reviews, referring friends, family, coworkers, you name it. So our objective is to deliver, make sure people have a great experience. And again, we're in the lending, and you get to at least go have fun, go shopping, if you will, with your clients. I get to send them a bill for 30 years, so you have to have a little bit of levity.
That's like the ultimate CRM, though. You know what I mean? Like, here's your mortgage payment. Smile, it's me.
Hey.
No, but I love it.
Again,
I mean, that fits your mission statement. Excellence, and always offering some of the best products out there and delivering some high customer service. Perfect.
That's the goal, man.
So when you got in the industry, Jeff, like, what did it feel like? What did it feel like to start your own business?
Ooh, okay. So I will tell you that it's probably a little bit more, the barrier to entry into lending is probably a slightly harder hurdle than I would have ever expected it to be.
Gotcha. Why?
If you are trying to get into lending and you don't have a lot of experience, companies out there, banks out there are not always willing to take on somebody from a risk perspective that hasn't had a proven track record. So it's not as simple of just going to a licensing class saying, hey, I want to do this. You often can't also do it part-time. So I think a lot about really successful real estate agents like yourself.
I was getting ready to say, I felt two daggers there. Two daggers being thrown my way. No part-time.
No.
It's not an easy entry to the education.
No, so I say that from the standpoint, my past life was in insurance. And I mean, it was almost like Survivor, where they'd hire a bunch of folks, and whoever was left remaining at the end of the year, they were probably doing pretty well. So I had a lot of experience prior to getting into lending, but we started off our team about 5 years ago.
Yeah.
And I had my mentor, Chad Loeb, in the industry, is phenomenal. Asked him what the heck was it going to take to have success here. Here's where I currently am. In my family house, I have kids, all these things have a lot of risk. What would it take to do X? What would a good trajectory look like? Whether that's from a production standpoint, income standpoint, client-facing standpoint, all of those things. So I'm pretty regimented, really big into planning and having some strategy behind what we do. And so about 5 years ago, we started up our team and our squad with a vision of delivering a really excellent mortgage experience.
Yeah.
We were able to do that based on the vision and leadership of my VP Chad in the branch, and then everything else has just been a nonstop, breakneck, just hustle. And at the core of what we do, I've always lived by that mantra of hard work works.
Yeah.
And if you go in my home office here, I have a little thing that work hard, stay humble. Those are all things that live my life by, build our team around those concepts. And again, the goal was to keep pushing forward and you kind of fine tuning.
I totally respect that. I think my favorite part about working with you, outside your personality and outside of all like the fun stuff, is just watching your systems and your business processes just run the show. And those don't happen overnight. Like that is a lot of forward thinking and a lot of pre-planning. Like it's fun to watch you work. It's like I get the auto emails and they're just so informational to the buyers. It's like, just so you know, we're reviewing your loan. Just so you know, we're going to need these documents. Like communication is so key in our service-oriented industries, right? Because like at the end of the day, sure, you're in the finance industry, I'm in the real estate industry, but it boils down to customer service. And the customer only really likes working with someone that they can relate with, that communicates with them, that educates them. And when you constantly are talking to them, whether it's an automated product or it's a hand-delivered note, it goes a long way. Like even those automated comments, because I know that everyone has to automate their business somehow, right? Like you just have to, if you're going to run an established business and scale it to a point where you can help others, you have to have some level of automation. But with that said, like your team does just such a nice job blending the automation with that personal touch and educating that client. It's fun to watch you work. So you started, right? You started this 5 years ago.
Yeah.
What mistakes did you make along the way?
Cool. Not prospecting you sooner.
Oh my goodness.
No, I think it's when I take a step back and part of what we've done over the past couple of years is take someone that didn't have experience on the lending side, and now we have a couple additional team members on our team that had never done any loan work before.
Right.
And to see my brother who joined our team last year having insane success, to our newest team member Kevin that joined our squad literally at the beginning of this year, having success early. You've interacted with him quite a bit, but Dave King and Judy Woods, who run our operations behind the scenes, seeing how they're able to adapt, provide instant feedback, and knowing that obviously it's, as long as it's not a compliance related thing, that we can make an instant tweak to improve something.
Yeah,
it's really important. And so you've mentioned a couple things where really gravitate towards from a technology perspective, but also from a scalability perspective.
Mm-hmm.
And so a lot of the items or the things that you call automated emails are actually Dave or myself or Kevin or someone is actually sending those.
I love it.
So we've come up with the templates, and think about the most finite of resources is time.
Yeah.
And I look at, I used to go back and forth with 15 different emails or text messages or phone calls trying to come up with a time to have some type of pre-approval meeting or closing disclosure meeting with the client. That's where I leverage the technology, nothing crazy, but through Calendly, and it syncs up with my calendar. People are often, after they've had their busy day, they finally get a chance to read my email that I sent over to them. They click schedule, they find a time that works for them. It's already adapted to my calendar and when I have availability, and boom, whether it's a day from now or a week from now, there's a calendar meeting. Obviously, if it's a little urgent, we can
you can always bump it up
and have a conversation at night or the weekend and stuff like that.
Right.
But that has kept me sane. So when you only have a couple clients, which anybody starting off a business, you seem like you could do anything, whether it's attend every settlement, whether it's send every individual email, not have templates, those things. When you start to have a few, and then many, and then lots, the scalability piece really comes into play. And so time, viewing that as that central component that is finite, that's where that comes into play. And so we've continuously adapted what those templates look like, or what communication or inflection points a client you should be proactively talking through, whether that's during pre-approval, or maybe somebody that we talked to wasn't ready to apply yet. What type of touch points, what we call a drip campaign or tickler file, what that might look like during that phase. When somebody has applied or they're under contract, there's different communication touch points, but we want to make sure that we're always constantly ahead of that.
Yeah.
And again, we're not perfect. Some things fall through the cracks, but again, that constant improvement really drives every single individual on our squad, and what really keeps us going and improving.
No, I completely agree. I remember one of our first transactions. That's like, we were going back and forth just having a conversation, and you were like, "What could I have improved on?" I was like, "What? You're not just promoting your business? Like, you want to learn how to do better?" I think that just says a lot, right? Mistakes are always made, but it's the way that you recover, and it's so cool. I have so much respect for that business model. Yeah, no, we always had so much fun, and we still do. So along the way, like, you've been in business for 5 years, and you've helped. Like, you've got a solid team, so you're pumping out volume now.
Yep.
Like, what's your favorite memory? Like, what stands out? Like, what's your most favorite memory in starting your business?
I should have prepared for that one better, because there are.
I sent it to you in an email. I automated that email too, Jeff.
It probably went to my spam.
I'm teasing.
You got to have certain words in the subject line. No, so I think so many people are focused on accolades and recognition. And so I have always been driven, and this is fundamentally
You're talking to a HomeSnap award winner.
But so those things come when you provide a good service or a good experience. Yeah. And so the things that are most exciting, it's not the person that has pristine credit or is putting 20%. That's exciting and important, of course. Sure. But it's creating home ownership opportunities in an area or with a person that may have been looked over by someone else. And so one of my realtors that I partnered with in the very beginning of this experience, we partnered up on an account called Gallaudet University.
Oh, what?
And Gallaudet University.
Oh, Gallaudet, yep.
So,
mm-hmm.
So a nationally recognized university for deaf students, and there's a huge population in the Frederick area, and a lot of times they're really underserved.
Yeah.
And so it's important to me to be able to provide a good experience. I'm not sign language proficient. I'm not a CODA, but for me, it's about, if I need to have an interpreter with me, if I need to text an entire conversation or write it out, it's about having a good experience. And so to that extent, I'll never forget, my colleagues in my office thought I was absolutely bonkers at the time. But someone that didn't have a lot of money, she had a death in the family, buying a not an expensive home, really just got a not a great hand dealt to her. We'll just say that. And I had an opportunity I literally had to drive her to the IRS to help her get her transcript because we needed it. So cool. And it was not a seamless experience by any means. Some communication, back and forth, not understanding things, but taking that from somebody that had been overlooked to being able to go, I'd say, above and beyond, especially at the time.
Oh yeah.
And then being able to have a story to tell. And you, of all folks in this industry, know that we're not in sales. We're in the business of telling stories. Mm-hmm. And the more clients, the more customers, more homeowners that you're able to help, so you're accumulating stories. And if you're on any type of pre-approval conversation with me or pre-qualification conversation, it really lends itself to the idea of, look, if you're talking to me, the end result is going to be nearly identical for every client that we talk to. You want to leverage our bank's capital to be able to purchase a home. Okay? Every single person we talk to is trying to do the same thing. How we get there, and what the exciting part is, it's always different. It doesn't even matter if it's the same exact product that we do 100 times a year. It's going to be different. It's going to be tailored. It's going to be consultative. It's going to be unique to what your experience is and what your needs are. And that's where, again, we really pride ourselves on having a home finance strategy, not just getting a loan, right?
Oh, yeah.
And I think that's a big difference in your world, and why you got into starting your own brokerage is the idea that you didn't want to just be a realtor that sold homes. You wanted to run a business, and you wanted to help as many people as possible through that kind of platform. So we had the same type of mentality with that.
So cool. Yeah, no, it's funny like how you have those. You always have those memories that stand out, though. Like, isn't it?
Oh yeah.
Like, and you can. I don't know about you, but like you probably could picture yourself driving that person down the road to the tax office and saying, I need this document. I need this document. I'm in the car if you need help. Actually, I'll just go in because I don't want to leave the car running. I'll be in the waiting room. Like, I bet you remember.
I'll never forget it. We walk in. There's literally, this is in Rockville, the IRS office there.
Yeah.
There's nobody in there. A couple people that work there, and they're like, "You need to have an appointment." And I'm like, obviously I said it in a very polite fashion, but I'm like, we were not able to make an appointment. She tried.
Right.
She isn't able to speak with anybody. Didn't have enough services. Blah blah. Can you all you need to do is stamp this,
right,
and print off the transcript. It's going to take you literally 3 minutes. And so just kind of standing up for a client, I'll never forget that. But I also will never forget the fact that in very IRS government fashion, you need an appointment. I'm like, well, you guys are open for another 2 hours, and there's not a soul in here. Could you please help a brother out here, man?
Where's your calendar? Where's your Calendly link? Where's your Calendly link? I'll just sign up for the next available appointment.
Oh, yes. Yeah, you definitely, those stick out. And, it wasn't a transaction that was going to make me famous or anything like that. But it's doing the right thing.
No, but they never do.
Helping someone out.
The best
going above and
transactions
beyond.
never make you famous, right?
Yeah.
They never, ever do. And I think when you go in there with that service mentality that you got going on over there, and like I do the best I can too to follow that service mentality. Like it's in my mission statement to help others with the real estate needs. You don't focus on, you know what I mean? Like it doesn't focus. You just get in there, you help, and then 3-4 years later, you're just like, oh my goodness, I drove someone around to the IRS office. I marched in there and got them an appointment. The same day, 15 minutes later.
We're adulting hard.
So you got so you made a couple of mistakes along the way, not mistakes, but you grew in your business, and you always continue to learn. If you had like $1 trillion, what would you have done different?
Oh, well, I wouldn't have gotten into lending. I probably would have done something on the nonprofit side and charitable side.
Well, what nonprofit would you get into? Because that's a question down the road. So like, what nonprofit would you do? I know you ride bikes for charity. What do you do? What would you do? You have $1 trillion. We're out there like cruising the oceans in big fancy boats. Big fancy boats. What are we doing? I don't even know what they ride out there.
None of that. I don't like. I like to be landlocked.
Me too.
So definitely no mega yachts. No, I think it's when you take a look at things that are not necessarily going to be solvable in our generation or our lifetime.
Right.
And the things that we're talking big picture things. And so if you follow, like, there's all kinds of different billionaires that are out there, and money is no object of things, but a lot of them are. It's about giving that money back,
right,
and signing pacts to leave nearly all of their wealth back to organizations. So I think anybody does internally, like, what things have impacted your life. And so I've lost family members to cancer. Mm-hmm. So certainly putting funds into that type of charitable organization. I recognize that I have the ability and the freedom to live the type of lifestyle that I would love to live here in America because of those that have sacrificed for me. And so giving back from a charitable perspective to our veteran community is super important.
Right.
And why I participate, serve in one organization called Operation Second Chance. That's headquartered here locally out of Montgomery County in Germantown. And you keep going that further to climate change, to accessibility to water. And these are like down the road things that are super critical and important to our humanity. And we're going a little deep here for this type of conversation. But yeah,
we are. But I think that's like that was kind of my intent of the. Sorry for my camera. It does this blinky thing.
I like this feature. We're zooming in on you.
I don't know.
That's
It's technology. There, right? We're next time we're going analog. But no, I completely agree. Like, it is so important to give back to the community that serves you. Because, like, at the end of the day, the community's serving you. You're serving the community. But it goes back to the service mentality. That's really cool. That's an interesting perspective, though. If you had $1 trillion, you wouldn't even, like, you'd probably do this for fun. But, like, it would be more, you give back to the charities. You have a charity race coming up, or when's that start?
Yeah, so we do, it's called Ride Allegheny.
Right.
We do that in usually the first weekend in October every year. So we'll get schlepped from Gaithersburg up to Pittsburgh.
Yeah.
And we'll ride the Gap, so the Great Allegheny Passage that connects to the C&O Canal here on the Maryland side in Cumberland. And it works out to about 310 miles. The organization's been doing it for 20 plus years. And it is a phenomenal opportunity. So, if you have been a part of any other charitable organizations, most of the time their big event is a gala or something
big fancy where people walk away with recognition. Yeah, I'm familiar with that. I'm familiar with that. Yeah.
I'm like, yeah, sign me up, man. I could buy a plate for a charitable event if I'm getting involved in something. And sure enough, no, for this particular group, and it's very fitting for the what it supports, and from a wounded veteran assimilating back into society, it's this bike ride, and sure enough, every year it's $500,000 to $600,000 that's raised by 120 to 130 cyclists of varying degrees. So if anybody out there. Close to 600. Well, last year was the banner year. It was over 600K, but it's usually somewhere between 500,000 and 600,000.
Wow.
During this stretch, that this group of dedicated riders is able to generate for Operation Second Chance.
That's a big fundraising pool for each individual rider.
Well, there's some that are pulling much more weight than I do.
But that's still no small feat. Like, asking someone for $25 is just as hard as asking someone for $1,000.
Yeah, no, it's a really incredible organization, and what it does for the veteran community is it's insane and priceless. But we are going to get you out there at some point.
Oh, I'm looking forward.
I'm glad this came up because your Peloton stats are great. I don't know about your canal stats, but your Peloton stats.
I did a ride this morning. Well, you're the one who told me if you're not pushing your body weight on output, forget it. Just go out there and just don't even ride. So I calculated my body weight, which was, a number. And I've been hitting that number.
Good.
And then some. So, yeah, I would love to do that. So let's do that this year. I'll clear up by Sandy, my wife, and we'll get that going. So, all right, real quick about the market, because I know you got stuff to do. Buyers, how are you getting their offers accepted?
Ooh, man, this is
like how are they winning?
So Brett, you have experienced this obviously on your end. Never seen anything quite like it on the lending side.
It is brutal. People are paying $80,000, $100,000 over cash over. People are cashing out their 401ks, spending $600,000-$700,000 on homes, cash.
Yeah,
it's crazy.
So I will tell you that I think the funniest meme I've seen is that it's basically a real estate auction. What's the starting price, right? That's the list price. So I'll break this down into two categories. I'm going to break it down into first-time home buyer and someone that's going to be in that family home for a longer period of time, a longer arc.
Right.
And so for our clients that we're helping win contracts that are buying that, could be your forever home or the family home for the foreseeable future, let's say 10, 15 plus years. This is such an opportunity based on where the interest rate environment is.
Gotcha.
Just historically low rates allow people either more buying power and potential, or just the prospect of just saving that much more in interest over the life of the loan. So in that case, we are seeing typical buyer protections, such as appraisal contingency, financing contingency. In some cases, inspections, they're being done as what we call a walk and talk or pre-inspection. Those typical things, which again, we call them buyer protections because they're basically ways to get out of a contract if you no longer want to purchase it, and not have that earnest money deposit still at risk. In the sense of, if you have a really good vetted pre-qualification where we have reviewed credit, we've reviewed underwriting findings, looked at all income documentation, crossed T's, dotted I's, to use that phrasing, then that financing contingency might be a little superfluous and unnecessary.
Gotcha.
And if we've done our due diligence up front, everybody's confident. Again, my role is never as a lender to tell a client that you need to waive this. It's to be able to put them in a position so that if to compete with other offers, and in some cases, we're not talking about one other offer. We're talking about like 20.
Oh no, we're talking
30,
2023.
40. It's crazy.
It's ridiculous.
So, from that standpoint, it's about putting our clients in a position, if they choose to, as we tailor that strategy with the realtor involved, to get them the house, right?
Now, what?
So,
I didn't mean to cut you off, but what do you think about the?
No.
I read an article today on Inman. You follow Inman? Inman News?
Yeah, I do.
I read an article today. It was like one of their highlights, and they're talking about, are we in a bubble? And they're like coaching strategies to teach your buyers that we're not in a bubble, or to be things where I do enjoy Inman News. I'm not mocking them. But the way the article was written, they referenced 2008, 2009, 2010, 2011, and they say that back then people were putting 20-30% down for the loans, and now you have low down payment loans. But I mean, what I'm encountering out there, you have buyers they're either move up buyers and they're rolling the equity over from the previous houses they've lived in, and they have like $200,000 of equity. I mean, we're not talking like $7,000 that they're like, we're gonna put this one towards down payment. No, they're dumping like 80 grand in, but they're not dumping it into the down payment. They're dumping into that appraisal gap. So it's essentially a down payment, but it's just a different word for it. What do you think on that? Like, what are your thoughts?
Yeah. So we talked a little bit about that financing piece on the appraisal side. Yeah. So it's a unique time period. On my end, on the loan front, I do see appraisals in that kind of move up buyer, family house for a long period of time being waived to compete. And a lot of times, again, because the market is shaped by the most recent sale, and guess what? The most recent sale was pretty high. So I'm not seeing a tremendous amount of appraisal gap in areas where there's good data to support it. That being said, some people are going a little haywire in terms of those offers.
Yeah.
And when you have somebody that's just willing to, if you're buying the house for $500,000 and the home only appraises for $475,000, there's no appraisal contingency. They're still just buying it for what they agreed to before. And then either something's changing loan to value behind the scenes on the loan, or they truly are coming out of pocket extra. But in that price range for those clients that do have a lot of money to put down things, not as big of a concern.
Gotcha.
And think about, especially as you compare the kind of that recession bubble period of the early 2000s to today, this industry, our industries, were the culprit for what happened, right? Prior to the pandemic, the economic scenario was very, very strong, and specifically in housing. We'd already had a shortage. We already had fairly good interest rates, although they had crept up over 4 at the time. And we were in this environment that was already fairly competitive, at least here locally in the DMV. And everything was just exacerbated by the pandemic, where less people were putting their house on the market. Interest rates came down even further. Your millennial cohort, that I'd say probably 50% of folks in that cohort, especially based on NAR's generational study, I just kind of been sitting on the sideline. They live in an urban area, close to it all, and mindsets have changed a little bit with the pandemic, where more and more folks are gravitating towards homeownership. And when you can borrow money at a lower rate than inflation, it becomes a more financially savvy investment long term for someone. So all of these environmental items are contributing to just high buyer demand, a shortage of inventory. There's slower start on new construction due to cost of lumber and availability of resources, and all of this is just compounding. But for somebody that's going to be in that house for a long time, especially in this area, again, you can't take this as a guarantee or a warranty.
Sure.
You hold on to a house here for 20 years. It doesn't matter if you may or may not have paid a few dollars extra than an appraisal came in. You're going to pay that mortgage down. You have a historically low interest rate, and you're going to see price, increase, knock on wood or something here, over time.
Over time. I think over time is a key word. Oh my goodness, I always learn so much. I could listen to you like talk about real estate stats like forever. Because I mean, I'm a stat person too. Although our stats are completely different. Like you're following the financial market, and I'm literally like following the condo market, following the, like I follow the resale trends because although we do
Yeah.
new construction, the builder's setting that price. Right, I mean, you can
Yeah.
negotiate some stuff, and every so often you get a free washer and dryer and walk away like you feel like you felt like you're the winner. But at the end of the day, like stats, I just like eat it up, and I'm so happy that you follow those NAR trend reports.
Yeah, no, that's a great one.
Oh my gosh, it's
So
like
that was the one segment of buyers. That other segment is that first time home buyer.
yeah,
I'm a little bit more cautious there, and so those are very very strategic conversations we have to have.
right.
Because if that person historically, mom or dad or grandma, grandpa, told them buy the starter house, buy the middle house, buy that family house. Well, if you're buying that house for that first like 3 to 5 years of, either as an individual, young couple, maybe you have, one child on that property, you may be impacted in a short-term basis. So if you're going, let's say, to keep that kind of trend, 10 to 12% higher than the list price or the market value at the time. Well, if you go to sell that property in 3 to 5 years, interest rates are probably going to be higher. I don't know what they're going to be, but they'll probably be higher than today's historically low rates.
Right.
You may have construction, come back to their full effect, where there's not a shortage of lumber, or 2x4 is no longer $8 or $10.
Well, and the
you're
local
more,
planners, local elected officials, kind of get their act together and allow some more construction. But yeah,
Yeah, so you're going to have an environment a couple of years down the road where there could be some short-term price devaluation of a property. So that's where I'm very cautious to say, hey, because the interest rate environment is what it is, have you considered maybe stretching a little further and maybe getting into a house that you're more comfortable growing into, that are buying that first home, are going to keep it as an investment property. And so because they have a low rate, because they have their payment at X, they're going to be able to operate in the black much more quickly if they do turn it into an investment property. So I think you're going to see some trends, as things shape out over the next 3 to 5 years. And there's projection of there being a shortage of rental units, in most of our geographic regions here.
oh my goodness.
So
Yeah, we should talk about that another day because like
let's do it.
you're onto something. They call it the SFR, the single family rental. That's starting to evolve as a trend. Let's talk about that another day because
Yeah. Now we should do a little deeper dive on just what's going to happen with the 270 tech corridor and biotech corridor, because you're gonna have a lot more needs for folks that may only be here for a couple of years, and they're probably not going to buy, but you have all these bio firms that are going to try to attract folks to the region. So you're gonna see some interesting trends over the next handful of years.
I don't know if you can see like my little gears are just turning. Like it is.
Yeah.
That's good stuff. All right. So like, wrapping it up here because I really appreciate you being here. I'll make sure that all your links are in the not the comment section, but I'll make sure everything of your contact info down below. But tell us, like, how do we connect with you, and what do you want us to know?
Yeah, definitely. So www.novottynylending.com. That's NOVOTNY lending.com. You can, although I'm pretty terrible at it, my team is amazing, Kevin specifically, but you'll find us on Twitter at Novotny Lending. We're on IG, which I'm told is
Your
Instagram.
Instagram is blowing up. Like
We're trying, man.
It's like taking over my feed.
I gotta thank Kev for that. But you can find us on Facebook, the Novotny Lending team. So we're all over the place. I think we may have a YouTube channel, so we might post this to it. We've never posted anything to it.
This is the inaugural post.
I think I've had it.
I
think I've had it for 5 years.
Man,
so this might be the inaugural post. But we got some good stuff going on. And again, you can find myself or my brother Mike over at George Mason Mortgage on our corporate website as well. But NovottnyLending.com is going to be a great resource for you to find us. And again, we do a lot of consultations too. So I recognize that people have a lot of options when it comes to realtors, to lenders in the region. There are some excellent professionals here locally in both of our industries. But again, if you are already working with someone, or maybe there is just a really nice incentive to use the developer or builder's preferred folks, we do a lot of consultations just to make sure people are being put in the best product and position possible. And for me, that may lead to, hey, I might not be able to help you per se because you have a great deal and strategy where you are. That might lead to referrals or refinance opportunities. So just you kind of keep that in mind. It's not all about just being able to help you now and do something for you tomorrow. It's about investments that we're putting into the marketplace that may come back to us many months or many years from now. We're here to help.
You're a rock star. I really appreciate you being here. Thanks so much, Jeff.
My pleasure, man. Thank you.
Yeah, I'm gonna end the stream now.
Okay.
And let's schedule another one like a month or so out, and let's just get it going.
Yeah, man. Now this is fun. I'm gonna have to do some questions for you. So I think that's probably only fair for your listeners as well.
All right, I'm cool with that. I would love that. Jeff, you take care. Take it easy, and I appreciate you being here.
Peter, have a great one, man.
You too.